The price barometers are 5 lines that we've put in 3 charts that basically give us the ability to look at an indicator line and know that that line is following the price. That can be very important for those that trade on short-term timelines, and it's also very important in its relationship to understanding divergence. The Zip Pink Swing Zion and the 3 price lines, green, red, and blue, are your 5 price barometers. If the price goes up, these lines go up. And if the price goes down, these lines go down. That may not sound like much, but it's very powerful information when you can totally trust the direction of those lines and know what's happening. You can respond quicker to situations and act accordingly. In this example that I have here, I have a pink vertical line and a green vertical line. We think of price divergence when we think of zip green at 100 with a red candle, like on the green vertical line. And we think, or we identify with the fact that zip green is at 100, and in fact zip Zion has climbed up fairly strongly between the 2 lines, telling us that buyers are coming into the market, or at least there's more trades being made to move the price up in the market. Now, at this point, we would then think that the price would be going down. And rightly so, because on the pink vertical line, zip red is at 92, and on the green vertical line, zip red is at 50. 50.00, right on 50, with the gray at the same identical number. Zip red and zip gray normally travel together, but obviously if you're sitting there on that day of the green vertical line, you anticipate that it's going to go down, and obviously, like if I blow this up a little bit more, you can see that it opened up lower and it pretty much stayed lower, but it had a big upper tail on the day after the green vertical line. There was a pretty good sized battle going on there, and rightly so, because the day after the green vertical line began a zip pink, what we refer to as a zip pink diving board. The price stays up, but the trades drop, the indicators drop, all the pressure drops. But why is the price staying up? And that, of course, is that those upper and lower tails that you see on this candle, there was a relatively significant price swing, but the candle body ended up fairly small by the end of the day. The other thing that I'd like you to notice is back in here in these 6, 7, 8 days in here with these red candles dropping down slightly, you have swing Zion and swing pink underneath the slow moving lines, the swing red, green, gray, and yellow lines. They're pretty close together in that group, as you can see. Likewise, when this between the pink vertical line and the green vertical line, you have divergence between swing Zion up and swing pink down. And you also have, at this point, you're obviously, if we're sitting on the green vertical line day, we can't see the future on what's going to happen, and we're thinking about what may or may not happen. One of the things that we see up in the price chart is the price green crossed over price red. Now that is very indicative of a next day down pattern, but it doesn't necessarily mean that it's going to go down, but it often happens that way. When you get the crossover, then things start going down. In this case here, it looks like we had 2 or 3 days that it pretty much maintained itself. The other thing I'll point out to you right here in the zip chart is zip red and zip gray. Those two lines are paired, they're synchronized together, but look at where gray is running and red is bouncing up and down over it and under it these 3 or 4 days in here. It's like the two aren't even synchronized together. So you can tell, and obviously when you get a pink diving board, you've got some odd things going on. And pink diving boards occur down near zero with the green at 0, and the pink diving board will be typically above it a few points, just like it is just under green a few points up on top. And the zip pink is a price barometer telling us that the price is staying high. And then of course when everything else climbs up, the trades climb. If zip green is at 0 and the trades are all climbing and all the indicators are climbing, but zip pink is remaining low, again there's some odd things going on because the price is staying down low. Now with all of that in mind, the price barometers are just a very effective tool to have on those 3 charts that I was referring to. Obviously all 3 lines in the price chart are there, but we have the zip pink on the zip chart and the swing Zion on the swing chart. And so it gives us some added information. Note too, on the green vertical line, I started out commenting earlier that zip red went from, on the pink vertical line, went from 92 down to 50. And when that's that's 42 points in one movement. And what it does tell you too is, when you have the zip green at 100 with pink right under it, you basically have the required conditions that define a pink green top. And the signal for a pink green top is when red, gray, blue, and yellow drop off. And that's exactly what happened between the pink and the green line. They dropped off, but at the same time your price green and red lines went up, and the blue of course too. So what I'm trying to point out here is that we can look at the candles. We can see on the green vertical line day that we had a red candle with zip green at 100, meaning there's strong buying activity. And obviously when we look at it, we can tell what happened. We had a gap up, and that caused a lot of activity. But the other thing that I want to point out to you is look at the lines. Price red and green are up, they're price barometers, and the pressure lines, the zip red, gray, yellow, and blue, are all going down, and going down significantly. And that may, what I've described is, it may sound a little well, why? What are we, why are we doing this? The premise is that we always look at the indicator lines. We need to get in the habit of thinking what those lines represent in their direction and in their location, and obviously in their definition of what they mean. And so once you begin to understand those definitions and the relationships between, for example, price barometers and your leading indicator lines, then a lot of other things start falling into place with your understanding of the indicators and their relationship with price. So just a brief example, our understanding on price barometers. It's just a basic learning issue when we're dealing with some of this stuff, especially in the beginning. If you haven't had a chance to listen to a number of videos, I encourage you to keep listening and identifying what and how the indicators move, and I said what in their definition and what they are defined as and represent as a line. So a little bit of divergence in this issue as well. The other thing here, I'm going to back up and show you. Right here we had one of my favorites that took place and caused this gap, and that is right over here in the trend chart. I will put a vertical line there. Power red is down and trend red is up. Classic divergence again. And it's when we look at this and we see this defining, how are we defining the gap? We see all of the trend line, all of the power lines up above zero. So the up above power orange, they're also up above zero, but orange is more important than zero. We have Zion in between. If you look closely, you can see power Zion is in between orange and green. It's just crossed over orange, but the fact that it's in between the two lines oftentimes is a signal that will identify a gap. And it's obviously not always true, but one of the basic things about gaps up is that the power lines are located a higher percentage of time above power orange than they are under power orange. So the location of those patterns is indicative. In this case here, we got 3 days up on our power lines, and of course power red is at about 3.7, and that's fairly high for power red, and it's been in a crescent move, so it potentially could go down, but what it does is it gaps up and then we get a red candle. So we see a few things that would, if you look at trend red is in a low angle up, and actually trend red then, I said that wrong, trend gray is in a low angle up, and actually it goes down the next day, and we think of it as going down, but the down movement is a result of having gone down after that big peak that it gapped up, then went up, and then went down. I suspect gray was going up when it hit the peak, but then it came down by the end of the day. So there's, and on the green vertical line day is the day of the gap. Over here we have zip green at 100, excuse me, with zip Zion very high. Zip Zion there is at 89. So, and then again, we usually get a post in the swing chart, but swing Zion is in a low angle up to the vertical green line. Excuse me, that's the wrong day. Swing Zion is low angle up on the pink line, which is the day before the gap up. So I shouldn't have mixed these colors. This one here should actually be pink so that you think along the same candles. Sorry about that. So that gives us a little idea about price barometers. They're just tools that we use, but once you become familiar with the tools, the system just gets more powerful for you as you trade.